All right, ladies and gentlemen, I hope you had a wonderful weekend. We got quite the week ahead of us with Jerome Powell in Jackson Hole, but leading into all of it, the volatility of last week in August is still on investors' minds, and now there is a huge sentiment shift that is occurring. So I thought we would start off this week by talking about what went down last week, how some of the banks are feeling. This here is Morgan Stanley. We'll talk about what they were saying recently and how things were going down, but I want to talk about this because if you have been watching the watch list, I have showed you this chart in real time, and now you could see a pretty big difference, and this is why we need to talk about how so far here in August, this volatility has pretty much killed the no landing narrative, or at least it's taken us back to a probability of no landing. But you should remember this chart. Remember just a couple of months ago, no landing in green, it was the highest odds it's ever been at. Soft landing here in blue, that started to go down, and we were talking about how just in June, July, the odds of a hard landing, it was the lowest it has been in the last couple of years. You know, leading into this year, the odds of a hard landing, people were really worried about it in early 23, even in the end of 2022. To start this year, there has been a lot of euphoria. So what we noticed in this last week and how everything's played out, even though there was volatility, even though we bounced back up and some banks are feeling good about it, so far, and in the midst of all the carnage, the one thing not walking away, it is the no landing odds. And now the market has lowered that again, and now it's been the highest probability of a hard landing this month since the beginning of the year. So this is based on the fund manager survey. I'm going to go over a couple of things. And like I said, we're going to talk about some of the bigger stuff happening and what we could learn over the last couple weeks, and then how it leads into this next week, because we have Jackson Hole, a couple of things out of the Bank of Japan, a little bit of data, the wrapping up of earnings, and then before you know it, man, this month is over. Then it is the end of summer, and then it's like the home stretch leading into the end of the year. Before you know it, Halloween, Thanksgiving, Merry Christmas, baby. So, Chad, we have a lot to go over. I have all of that, the plays, the info, what I need from you. A thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. We will see you there in the morning. And don't forget, today is Sunday, tomorrow is Monday, and we need your help. This is the random account generator. What we ask on this watch list, you post a random option trade in the comments, keep it below $100, and we are going to buy it. And honestly, we've had some back-to-back hitters here, so let's go, baby. Keep it up, and thank you, my friend. But now, run it, baby.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Fear how I feel, then it feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, off the bat, I guess I should start with the long term, because remember, I was just showing you we got absolutely clapped, gave up like a month of gains in like a couple of days. Well, yeah, the long term is back up. Why I'm showing you that? Because the market has came back up and people are feeling a certain way. So we'll start here with what Morgan Stanley, not Bank of America, Michael Hartnett, that'll be the other one I'll show you, but Morgan Stanley, they gave this recommendation to their clients over the weekend. After all of this volatility, they say buy U.S. equities on weakness. They think everything is healthy and profit and growth is good. They said stay in the market. Timing the market is a fool's errand. U.S. elections matter, but economic growth and earnings matter most. They talked about AI being another tailwind and that there's still more profits to come, and overall that their overall core belief is that there is a good risk to reward for investing in the long term. So what I want you to see is that after last week, people are feeling optimistic even though there was volatility. You even heard about the Bank of Japan and the carry trade, hedge funds putting that back on. Overall, people weren't spooked, but now what we really need to talk about is this chart that we started off with, because there was an effect after the last couple weeks. We still don't know where August is going to end up. I still think there's going to be more volatility either towards the end of the month or even between now and the end end of the year. I said this on stream on Friday. Don't forget, we are right around the corner to like everything. It's now within 3-4 months. You get election and earnings and rate cuts or not, the pivotal SCP and Fed meeting, and then before you know it, a new president or not. So there's a lot of things that are starting to heat up here. So you're definitely watching impacts happen. And that's what I'm saying. After last week, ironically enough, the worry that has came back on the table, it is the U.S. recession and people worried about a hard landing. And that is now very weird. And this is why I wanted to show you guys this chart, because this is going back like almost 10 years, a little bit more, and showing you like month by month, if you did a survey, the fund manager survey, and asked these fund managers, you know, what their number one worry was or the biggest tail risk, what they would say. So coming into this month, July and August, what ended up happening and what you'll notice, the current risk people are worried about after these last couple of weeks here, everybody is worried about a recession and kind of the hard landing coming out of nowhere. That is how you would categorize this theme. Even though it was part of the yen trade and the carry and all of that, this is what it's getting chalked up to. And what you got to notice is that prior, we weren't always worried about a U.S. recession. The only other thing people were worried about prior to what we just went through, it was geopolitical conflict. Think about all the wars and everything going on. And then the other stuff, the purple bars, and this is what we've been dealing with since April 2021 or leading into 2022, it's been the inflation in a hawkish central bank as Powell and the rest of the world. There would be randomly, you would get geopolitical tensions. That would give us these worries in the market. Again, people would freak out about a recession. Again, March 2023 banking crisis, credit crunch. That's where these recession bars come from. But up until recently, we weren't worried about a recession. You weren't worried about that hard landing. Again, here's Corona in 2020, and you could go back even China and even all the other stuff throughout the years. It's a very, very fascinating chart. But the point is, this last couple of weeks, it has left a scar, but it could be a temporary one that we've seen several times. Like I was even telling you all last week, you know, it feels like what we went through reminded me of the banking crisis. That gave fund managers in the market worries for a couple of weeks, and then before you know it, we were back to responding to the central banks and then whatever else geopolitical conflicts as they arrive. So I think with the schedule we have moving forward, this is very important. But for now, the no landing narrative, that is off the table. And if data comes out in the next couple of months or whatever happens with the election, we're really going to try to determine what is the number one risk and do any of them come into fruition. So thought I would share that with you. I thought that was very interesting, but there was also some other cool stuff. We do need to talk about what is going to happen this week. I do think there is a decent amount of data, a lot of foreign data and CPIs and GDPs and stuff people will be able to react to. But I think this week is very deceptive because it's going to be smaller data, and you've seen how the market could react. Again, summer low volatility, even as we're or low volume, even as we're getting this volatility. But we're going to be doing absolutely nothing. And then Friday, you get Jackson Hole, Jerome Powell. That's going to be his big speech. It could even be a dud, too, because everyone's hyped up for it. He could just come out, say the exact same thing, and then there you go. It goes from event risk to absolutely nothing. And then on top of it, on Friday, we are also getting a special session with Ueda, the Bank of Japan, and they're going to be talking about the rate hikes that they did at the end of July and just really what went down and where they're going moving forward. So really, there'll be data to move to, and maybe we kind of dance around, and again, we either advance or dance on the S&P leading into all of the data, but it's really Friday that we actually get something that could really move us and add to it. Because I was even saying last week, even though Japan and all that was an issue, the yen and bonds have not retraced, and it was very quiet out of Japan last week. So we'll see if we get any volatility there, or maybe if Powell is the one that brings it. But that being said, that's all I'd be watching out for. There's a couple of other things, but I do want you to notice, you know, the effects and kind of some of the baby scarring that we went through last week. And like I showed you some of those other charts and people now worried about recession. This one I thought was very interesting because although people are reacting and getting fearful in a certain way, this is showing you cash levels. So if you went and surveyed all the fund managers, how much cash they're holding, they're not holding that much cash. And what, if you don't even understand what this is showing you, what I really want you to see is there, just October 2022. Remember, we were stacking cash around there. We bought Meta and a couple of things, but we had a lot of cash. Remember, people were worried after rates and all of that. And then little by little, and then the banking stuff, you saw how the cash markets, and you hear everyone talking about money markets and cash. It's different than overall cash levels that fund managers are holding, but this is word to like even the craziness we saw last week. Remember, there's a lot of leverage out there and a lot of people were invested. It's not like the same fear you were going through about a year or two ago, and that's what I think made a lot of these moves a lot different. So that was important. The other one, I thought these were kind of fun to look at here too, even though you had a big move. And look at August 24, July, June, these are showing you the change. And this is why it's important, because last week caused a lot of moves, but some things still stayed the same. So what this one's showing you here is that even though there was a lot of movement and some deleveraging after the volatility and craziness we saw last week, the most crowded trades, it's still long the Magnificent Seven, short the China equity, short the Japanese yen, 2-year long on the 2-year, long small caps, and then long on Bitcoin. These are the top like 5 or 6 most crowded trades of the year. And you can see they've borderline stayed the same, even though they did retreat a little bit. At least long Magnificent Seven, that did drop after last week, but shorting China equities, people are more short now. And then even the yen, it barely moved from the last week, even though we had that craziness. So ta-da. And then finally, or I think, yeah, there's 2 more, but this one, it's also showing you so far in August some of the leaders, and I would keep this in mind if we get more volatility, but bonds have been the big winner. Cash, healthcare, REITs, industrials, staples, those have been the top ones, and everything else has seen outflow from the fund managers. And then this is just another way to show you what I was going over there of how people are now worried all of a sudden about a U.S. recession and a hard landing. That really wasn't the case leading into it prior to this week and what we went through with Japan and all that. And this is one of the big shifts. People were more worried about geopolitical conflicts. They were more worried about higher inflation. Even like a credit event, it was kind of around there. U.S. recession was above that. But now, after what we went through, all of a sudden, this is on people's minds. So thought these were all important. Like I'm saying, this week, it's going to be very simple. There is going to be a wrapping up of earnings. We're not going to be dealing with that. We will be getting data, but once again, bonds, what happens with this recovery? Do we get more volatility out of Japan? It'll be key, but now also, too, these are some of the final weeks of summer, and then hopefully we wrap this up, get into the end of summer, the volume comes back, and then we see how we close this year and hopefully get a lot of answers. But now, let us get into the plays. So, right off the bat, we have a lot of different things to look at, but, I thought I had all of these all in one, but here they are. All 3 plays for this week. Number 1, Estee Lauder, Whirlpool. Value plays, I think it cut it out, but I was saying here, value plays are all still on deck. Eli Lilly or Estee Lauder, they have earnings this week, so I would watch out for that. But like Whirlpool, we even seen what happened with Nike, MO. Pfizer got clapped a little bit on Friday. I think there was bad data. I would watch out for that. Even keep an eye on any of the monkeypox plays. I didn't hear anything over the weekend, but those were really active on Friday. We even made one, but I still like a lot of value, even both for the long term and in general here. If we do start to get some shifts and even more volatility for the rest of August, like I showed you with that chart, healthcare and value, they did attract a lot. If it wasn't bonds or cash, it was certain industries that were defensive and are underperforming and could benefit if we do get a shift here. So I think you should look at the same. So that is play number 1. Then play number 2 is gold. Gold is absolutely insane. I don't have a play. Last time we played gold was long at like 24.08. Then there was the rollover and we got out of that, but it's absolutely crazy. It went above 2,500 on spot price for the first time ever in history. Futures around like 25.30 or something. I think there's still a lot of runway. It's either going to keep ripping through 2,500 or maybe it'll hold. But what I mean by runway is just keep in mind you have another round of central bank actions in about a month. September is going to be big for both the United States, Europe, and all around. And then even leading into the election, there's all these different events, and gold is just nonstop. Remember, even like the beginning of the year, I was shorting it at like 2,100, 2,200 was high, $2,000 was high. Now it's at 2,500. Since, this is what I was talking about, a lot of people don't realize, since October 7th, what went down with like Israel and all of that, that was like a little short-term bottom on gold. It is up about just under $1,000 an ounce since October 7th. That's kind of how nuts. It was at like 1,600. So this is crazy. I'd watch out for it. Again, I think there's a lot of risk positioning too high just in case it does go down. We saw what happened with some of that liquidation, but breaking these prices, it is just something you should be looking at. And I don't know, it just depends on what level of risk you're looking at. But I will be watching gold this week. I think you're going to be hearing about it. That is play number 2. And then finally, play number 3, man. Watch Baba, Baidu, and K-Web. Again, watch for any outperformance on any more overseas volatility. That chart that I showed you with the shorts kind of getting back on there, I thought that one was very interesting because people were feeling a certain way prior to that. But I do think if Japan does bad, China should be able to benefit. And even last week, we had Baba earnings. It wasn't the best, and they got a bid. So if that kind of continues, I know JD and the rest of them went up. I still like that. And I did get rid of plays on Friday. We were talking about it. I got rid of my Roblos that I held for a while. I got a small gain. And remember, I've collected like 9-10 grand on covered calls over the years. So that was good too. Sold out of my Chewy plays for a smaller loss there. I am still holding like MPW flip shares and Intel. And I said I want to get rid of it, but now in like my TD Ameritrade account, the trading one, not the long-term forever baby. And I'm very optimistic about the long-term. Again, short-term, not too confident, but I did. Now I only have Baidu in that one. So we'll see where that goes. Still believe in that, but I like that. And then I think that's it, actually. Those were all the plays that I did. And the only other thing that I made on Friday, or only other action, it was TNXP, little baby penny stock, but this one, they put out a press release the other day. They weren't mentioned on my scanner for the pharmaceuticals as one of the monkeypox plays, but then they came out with an update that their old small packs thing was able to do it. So I thought, hey, why as well? I didn't trade a lot last week because we came off the gains, but I don't know. I was kind of hesitant a little bit, but I was like, all right, let me grab 2,000 or 5,000 shares just in case the monkeypox stuff goes crazy. Got them at 50 cents. It was trading at like 60, 70 beforehand. Again, there's still like SIGA and GovX and all of it. So like I said, no crazy news over the weekend, but we'll see how any of it plays out. Take it from there, and hopefully this week calms us down and we get a little bit more clarity leading into the end of summer. But chatter. Tennis or watch us, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post or watch us. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, baby, we don't waste anything. Everything's for a purpose. Oh, yeah, put it to work, baby. And if you work, but faith is never wasted. Oh, man, I have a lot to say. Oh, don't get me started, Chad. But I love you. I hope you had a great weekend. We're relaxed, ready to go. Get ready for game time. Keep that armor on. I'll see you in the AM end. Or not.